So today, I wanted to go through strategies. What is a strategy? How do you put together a strategy? How to use different confluences. Dead easy when you put it all together. The first thing, obviously, what the hell is a strategy? Strategy is a long-term plan that determines how you will achieve a goal, which can be, in business, in the gym, out and about, work, trading, likewise. Strategy is life, basically, how you're going to strategically make your way through life. So, going on from that is how do you put together this strategy, especially in trading form, because, it's not the simplest thing to do in the world. Everything gets a little bit mixed up, especially if you're a beginner, something like that. So, getting it started is really quite difficult. So, I'm going to try and make it as simple as possible and make it a little bit easier. So, the first thing I want everyone to imagine, if you want to get your notebooks and stuff like that ready, is when you go out to eat, and I know this sounds a bit strange, but when you go out to eat, you have a menu. And obviously, if you're a beginner, if you're obviously an amateur, you're learning this stuff, you have all these confluences in your head, you get a bit confused, you're getting, which one do I use, which one do I pick out, which was the best. You have your main menu and your sides. This is how I usually teach. So, main menu, all your confluences that you want to get ticked off. So, obviously, it could be anything from a fair value gap, SMT, inverse fair value gap, sweep. Maybe your main things that you maybe see most days that you want to get checked off, that you'll see in there, and they're the ones that you go, right, if not one of them is there, I'm not trading. They're great to have in there, and it's great. It's a good rule setter. It's really good for the mind, because you're not going to start skipping things. You're not going to go, oh, that's not there, but it looks really good. You can go, right, this is my menu, I'm sticking to it, I'm doing it, and that's it. And then obviously you've got your sides. These can be anything, these obviously can be anything that you want to choose. You can choose anything out of these. They don't have to be anything I choose. You don't have to take my advice on it. I don't want to stick a lot of confluences down your front and go, this is the best. This is the one that I found is the best in fucking 8 years. Everything is obviously automated for you to use, and what you find best, what you find easiest, and it's the simplest. Don't listen to people that will shove a confluence down your throat and go, right, use this because it's the best. Use whatever you fancy. Use what you've tried and tested. Use what you find the best. So your sides are like advisories, let's say. Stuff that you might find some days, but are like nice add-ons. So, like, obviously you've got your chips, you've got everything else. Maybe, this one's got an order block, a breaker block. This has got a higher time frame sweep. Whoa, cool. Instead of just a little session sweep that we usually go for. So these are, nice little add-ons that we can go, right, let me just check my add-ons. Have we got anything in there? Cool, let's go back to my mains, and we'll go from there. So, I want to go through a strategy that I use, and I do teach to a beginner to get them sort of on the tracks. This is something that I use generally, something that works for me. This is obviously something that gets people going. People can start using whatever they want after that. This is not something that I go, right, fucking use this. I just want this to be as straightforward as possible. You can obviously research these. These are the most popular ones you'll find as well. You're not going to find... you will probably know what most of these are once we go through them, but I'm going to try and dissect all of them as we go through them and make it nice and simple. So, obviously, first of all, what we're looking for is daily bias. That's another video, but obviously you want to be marking out your highs, lows, high time frame stuff. Cool. Looking for any more clues, any more high time frame confluences is always nice to find. Any trend lines. I know ICT traders don't use trend lines enough, but I very much advise that you do. It's really good. It's a big advantage. So The first one on my list usually is a liquidity sweep, is what I am always looking for. First thing is a sweep. It makes things so much easier, so much clearer. As soon as we go sweep, cool, boom, let's look for the next series of confluences that are going to happen. So, anyway, let me just point out an example of what a sweep is. So, a sweep, you have two sort of different things where people get a little bit confused. So, a sweep is when you can see here liquidity, and then you can see prices then push past, but not come down into this section and continued. It has turned around, grabbing a load of orders down here, and then continued in that direction, the exact same direction that we was heading in anyway. So this is where people get confused. So you can also see things like liquidity pools. So this is where, let me draw this up, you have your line, and price will just come and bounce off this, bounce off this. Here's your sweep, cool, and bounce, bounce, bounce. All these are liquidity pools, where price doesn't quite sweep, it doesn't have the orders to grab, but it will come down because it has price to max down there anyway, and there might be some resting orders, not quite where the sweep is, but hanging around that area anyway. So it's really decent, and it's really good. It's definitely one to be looking out for, is that one. And it's when price is coming down to that area, usually you are going to be looking for some form of reversal rather than a continuation, simply because you can see, you know, a lot of the times liquidity, look, come down here, liquidity, oh, here again, liquidity, big sweep. You'll find a lot of forex pairs like to have nice big sweeps, especially some of them. I find that GU and EU find to have bigger sweeps like this one. So you're still on this baseline here, as you can see, but you've got these big sweeps. So always keep an eye out for that. Don't get faked out by coming under the line, under this baseline of liquidity pool, and then going, right, hang on, we've retested. Don't be fooled by that. That could be forming an SMT, that could be forming anything, or it's just resting in that area, trying to grab them next orders, or simply just consolidating. There's so many options for what that's doing under there, but do not be fooled, because a lot of people get a little bit confused when it gets down there, and they're like, oh, hang on, should I actually be selling down here? Should I be buying? But the reason a lot of IC3 traders are always looking for the reversals is because it's a higher probability sort of gain. In that sort of circumstance, it usually does reverse rather than breakthrough and continue. Obviously, unless you're in like a higher time frame sort of, you know, uptrend, something like that. But you can still see in a day's work, it's usually still a high time frame sort of consolidation. There's not, you know, there's not usually big breakthroughs through the day where the thing's just going and going and going, unless you're on like a really volatile, you know, Nasdaq ES. But you can still see them pairs respecting sessions. You can still see them sweeping sessions and making reversals off sessions. You still see that shit day in, day out. So it's seriously one to look for, is a nice clean sweep and then a reversal off the tops, off obviously the top side or the bottom side. It's obviously one to look out for. It's one to back test as well if you're not too confident with it, and it's very decent. So the next on the list, this one is where a lot of people get confused, and we've all been dissecting it this week. Where the people I teach, we've all been dissecting them and how we can use them all to our advantage, but properly. So it's an SMT. So I'm going to show you an example instead of actually getting this shit on the chart. So an SMT is typically, let me actually put it like that, make it a bit tidier. When you have two charts that correlate, however, they correlate unmatchedly, basically. So they form a pattern. So you've got lower lows like this, but then all of a sudden you've got higher lows. So you can see from here to here, from there to there, and from there to there. Already you have this distortion where the chart is completely off, discombobulated. You know, the chart's not basically it's the exact same as like a Doge candle where it's very indecisive. Basically, one market is grabbing the orders, one is not, so which means one market is then going to be lagging behind and pushing up further because it's trying to catch up. That is all it is. It's it's grabbing orders. However, the other market doesn't have the buy limit orders or the sell limit orders in place. Could even be stop losses that it's trying to grab. Doesn't have them in place to go down there. However, the other correlating chart does, so it needs to go down there. So the next confusing part about the SMT is what happens after the SMT. So a lot of people think that's the SMT done, and we have to speak no more about this. So after, you want both charts to still be discombobulated. You do not want them to start travelling both in the same direction. That is so perfect and clean. You still want them travelling in the same direction somewhat. Yes, however, you do not want them to be reacting the same, basically. So I would like, let's say, this chart that came down here, I would like it to be doing a little bit of, let's say, a bit of that. And then this chart to be doing a bit of that. So if that makes any sense, I want one chart to still be very, very confused, just to show that both charts are really confused by this SMT and something's really off. I don't want to see, after this SMT has been formed, that there is absolutely no distortion at all between the two charts. I want to see that after the SMT there is something completely off about both charts and they're not reacting the same after the SMT. That is what the SMT is for. It's not just to show a reversal randomly. Because there is obviously two types of SMT. There's like the display SMT, fictional, and then there is a real SMT, where the real SMT works and the fictional SMT will just show you things. It'll just show you an SMT. Like in this case, it could just show you this SMT coming around, and then just go like that. Exact same with this. So you might end up getting absolutely nothing from these trades. But obviously what we're wanting from the SMT is to show us the leg is actually going to be big enough for us to get a half decent trade off it. That is what we're looking for. So after the SMT, I'm wanting one chart to form us maybe a nice fair value gap, an equilibrium, something like that, something to show us that we're actually going to get somewhere, and then we can take a trade off that SMT and go somewhere. Whereas the other chart, I want to see that a little bit messy, maybe already taking a bit of acceleration. I don't want to see that chart after the SMT is formed that's looking the exact same as the other chart. I want them to look a little bit different after that leg's taken off. So that is basically SMT. A lot of people don't really know too much about after what happens, unfortunately. But you want to be looking about what happens after. Usually it can happen within half an hour to an hour. It can happen 20 minutes, depending obviously on your time frame and what you're using. It could be 4 hours, so it could be days. Obviously I'm just trying to stick around the 5-minute time frame here for what we're using. But yeah, usually that is when you'll start seeing your confluences come in anyway, is after your leggy SMT. That is usually the first thing I'll be picking out. So the sweep and the SMT, I'll be picking them out first, just to show me a good sign of a reversal. And then after, I'll start looking for some other things. So the next on the list is, I'll draw this one out as well, instead of trying to look for, is a market structure shift. So it's very, very simple. We used to call it a breaker structure. I have to believe a lot of other strategists do call this a breaker structure, but ICT traders call this a market structure shift, simply because the structure in the market is shifting. That is, does it says on the tin, is very, very easy. It's also basically breaking the structure. It's, in my eyes, it should be just called a breaker structure. It shouldn't be called anything else. I mean, it's a change of character. However, there was a lot of implications with that and how people want to go ahead with that. But we'll go by the term of a market structure shift. So With a market structure shift, you have usually a long downtrend or a long uptrend. So we'll do it from this side. Long downtrend like so, or you can have a long uptrend like so. Cool. Let's say this here is our area of interest, you know, liquidity area, and we've just swept. Cool. This here, this little area is where I'm wanting to see us break above. So this will be my last leg down. This could be creating an order block, break a block, etc. So I want to be breaking above this point. Cool. A little bit like that. Obviously this leg won't be as big. So then you can start to see little things come into it. So you've got your sweep, you've got your market structure shift that comes into it, and then you've obviously got a little start of an uptrend. Cool. Now you can start to see your fair value gaps form, your breaker blocks form, your order blocks, sorry. All the little things like that around this area, your equilibriums form, your SMTs might start to form, you know. Little things like that. That is one very, very key thing and massive to find, especially after your sweeps. You want to be finding that structure shift, really to break that previous structure and come just above the last leg down, just to be seeing that. Let me see if I can find a good example somewhere, and then we'll be able to make a little bit of a decision. Price action's been a little bit slow. This is an okay one. It's a little bit hectic, it's a little bit fast, but it does show you sort of what happens. So you can see here, you've got your downtrend, downtrend, down. Well, this is a bit blocky consolidation. However, you do have leg down, up, down, up, down, up, down, up, down, 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 etc. And then you can see from this, you've got a leg down. From here, this is technically change of character because we have just up candles rising above all of this previous structure. So this is change of character at the minute until this candle forms and shows me we have broke above this candle, showing me there's an uptrend. So I've got a market structure shift. Cool, we're in an uptrend, we've changed character, we've changed everything. It's very, very fast is this. However, this is still valid, and you can see the size of the push is great, and you can see from this you do get your gap, which is nice. Usually we'd like to see this coming back down a little bit more to form some SMTs around this area, something like that. This price action is a little bit slow with it being so late at night, so you can see this is around 11:30 at night. So you might find something obviously within your London session, New York session, whatever session you trade might be a bit more lively. So you want to see this come back down, create some SMT divergence. That would be lovely. And then you can find off this equilibriums, breaker blocks, order blocks, etc, etc, etc for you to get in this trade. You want to be getting in off the retest. I don't want to see people getting in off this candle. I don't want to see people getting in off this candle. Pointless. You want to be waiting for this candle to come back down and then off this retest. So if this candle's coming back down here, filling up these nice gaps, in an ideal scenario this is what you would want to happen. You want to be waiting for this clear retest to the upside, because then you've got not only a good extension off your gaps here, cool, we've got then as market structure shift, we've got a change of character, cool, beautiful. So everything's happening in our direction, and we broke above all this previous structure that's happening there. So a lot of indications, and if you came down there you might end up seeing a little SMT form. So that makes things very, 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 very simple. Makes things very, very nice for us. You just want to see things getting formed. You don't want to be waiting on things to be forming. You just want to let it all happen in front of your face. It makes things so much easier when you just let things happen. So what have we covered? We've covered SMTs, we've covered liquidity sweeps, we haven't covered fair value gaps. So a fair value gap, dead easy. Let me see if I can find a decent little example. This is the easiest one out of them all. Usually a 3 candle pattern. 1 candle, 2 candle, 3 candle. We want the middle one. You've got a wick down there. Let me just zoom it in nicely so you can all really see that. You've got a wick down, and on the 3rd candle we want the wick up. So we're interested in this section that has this wick here and this wick here. We want just the body of the 2nd candle. Just the body, so I can take my box from there, I can take it down there, and now you can sort of see what happens. So when you see obviously this downtrend and then this is sort of having a bit of fun, you can see this has left this nice, what we call in the game, imbalance, where there's an imbalance left in the market where price is not being yet, so price is going to want to come up, fill this. Beautiful. Coming back up, grab it. It can be a wick in, it can be body in. The body does not want to be past the box. Nope, it wants to be in the box. Does the body. The wick can be up here. The wick does not matter. The size of the fair value gap doesn't matter. And then what you're looking for is an extension out. A nice extension out is better. You do not really want a consolidating extension out because it makes things a little bit trickier to read, and it doesn't look as nice for your brain, I guess. You know, you want a bit more solid confirmation that you're going to be leaving that area. That's really what the fair value gap's for. I don't want to see no little tiny candles coming out of that. I want to be waiting for a good sized candle to come out of that box just to show me that I'm going to go, right, finally, we're going to come out of that area. Or, you know, you can wait for the close below, you know, this previous, and then obviously, then you've got that. You've also got, while I'm teaching you this, a BPR, which is an inverse fair value gap. So a gap of the fair value that gets inversed, like so. So a fair value gap that basically doesn't work. However, it does still have a value. So the inverse fair value gap is there, look. So the fair value gap that you marked out at the start then closes straight through. This is not the end of the world because this is a good sign of a reversal. So now you know you're going no higher, which is great. But if you ever see this sort of pattern emerging, where you've got inverse fair value gap and a fair value gap, that becomes a BPR, which is called a balanced price range, which makes basically 2 confluences to 1. So the inverse fair value gap after this usually happens will usually have this retest anyway, but if you've got a fair value gap as well, it's going to double your odds. You're going to have a bit of a better chance of it getting there. So they're all basically main confluences. There is a couple more to run through, equilibrium, order blocks, you know, breaker blocks, but I want to excuse me, I want to let everybody have their own opinion on them. I want to just run through the main things to get people started, the main things for people, you know, to sink their teeth into, and I'm going to be uploading another video on, if anyone comments on this, to, you know, I'll go over more. I'll go over order blocks, breaker blocks, you know, I'll go over the daily bias again, I can go over anything, but they're the main ones you want to be, not so much, I don't want everyone to jump in the chart and go, right, I'm ready, let's go, but I want people to be going on the chart and going, right, let me see how many I can find. Let's set up a London session, or let's set up a New York session like I'm going to trade, and let's see how many I can actually guess. You know, just keep trying to find the things and see what works best for you. Write them down in your pad. SMT, fair value gap, inverse fair value gap, liquidity sweep, session sweep. Obviously, you've got to keep in mind ICT traders take the liquidity of the previous session, always. So as a London trader, you are going to be taking Asia session. As a New York trader, you're going to be taking London liquidity. So always taking the previous session. So obviously I trade London, so you're going to be taking 12 AM till 6 AM liquidity. There's a cut off at the end because there is no volatility. Basically at the end of New York and the end of London, basically there is no volatility left, so there's no point counting that end. It's just basically getting ready for the next session at that point. So that is all the main stuff. Obviously, the strategy includes a hell of a lot of patience, a hell of a lot of mindset. But I'm more than happy to go over that in another video. I just wanted this to be more confidence based, and really try and get people on the charts and try to let people feel a bit more confident with it. Because I know the SMT is a bit of a one that hasn't been covered much, and I know that people don't really cover things individually too much anymore. They gloss over it too fast. It annoys me. But yeah, that is it. If anyone's got any questions about anything, I have my full links in the bio. You can comment on this, and I should see it because it'll be about one comment. So I appreciate it, and I'll see you all there.